accuracy means nothing. If I told you you could be 90% accurate in your trading and still be a losing trader, would you believe me? Well, listen to this. Most newer traders start out chasing breakouts. They follow people like Ross Cameron on YouTube. They read some stuff online talking about buy at the breakout. They literally wait for the trade to start breaking out before they buy. And they're told to do all this on small cap stocks because they move so fast. Like risking 5 cents to make 10 cents, but do it on 10,000 shares or 1,000 shares. Like what the? In my opinion, this is the exact opposite of how a new person wanting to pursue trading should begin their journey. First of all, you don't get to choose how much room you're going to give a stock. You also don't get to choose if 10 cents is good enough to take profit. The market tells you. You don't tell the market. The chart will inform you how much you need to risk and where your 2, 3, 4R are, not the other way around. When someone asks me what my accuracy is, and this is fairly common, especially from newer traders or people on social media, wanting to know if they should listen to me, if what I have to say is valuable. Instantly, I know they're either brand new, haven't yet started trading with real money, or they're not profitable in the trading that they do conduct. And let me explain why. You ever heard the phrase, you can't go broke taking a profit? Well, I'm here to tell you, you absolutely can. Check it out. Let's say that I am this 90% accurate trader. Let's say I took 10 trades today. On every trade I took today, every winner was $100. Okay, I took a trade, took $100. Took another trade, another $100. I did that all the way up to my 9th trade. I had $900. And then that 10th trade comes along. I enter the trade, same as all before. I'm in a small cap, low float stock like everyone tells me to be. I bought a breakout. It's a false break, slams to the ground, and I just lost $900, let's say $1,000 on the trade. How did that occur? Well, I obviously wasn't managing my risk the same on every single trade. Maybe I sized up at the end of the day. Maybe I felt like what else could go wrong? I just won 9 times in a row. It's not like one trade can take all that away, right? Wrong. It absolutely can. And in the example I just gave you, I only made $900 on 9 trades, and then I lost $1,000 on one. That's 90% accurate, yet I'm negative $100 at the end of the day. So what does matter then? If accuracy doesn't mean anything, what actually matters? And the answer to that is profit-loss ratio. What is your profit-loss ratio? That is going to dictate what your accuracy needs to be break even on the day or on the month or on the year. Your profit loss ratio is the average amount of your winners. That's your profit ratio. Now your loss ratio is going to be the average value of all your losers. This is going to give you your profit loss ratio. Now, let me tell you something crazy. You ready for this? If your winners are twice as big as your losers, okay? So let's say back to the $100 a trade there. If all my winners are $100 and every time I lost a trade, I only lost $50, that's 2 to 1. So my winners are twice as big as my losers. I only need to be 33% accurate. That's it to break even, which means anything above 33% is profit. And that's just 2 to 1. My actual profit loss ratio is closer to 3 to 1. And with a 3 to 1 profit loss ratio, you only need to be right 25% of the time to break even. Anything above 25% is profit. Last month, I did 67% accuracy. Sometimes I've only got 50, maybe even 40. But my winners will be so much larger than my losers that I walk away with enough money to pay the bills. There's no reason to chase 90% accuracy. There's no reason to try to be right every single time because you're not gonna be. So how does somebody actually end up with a 90 or 80% accuracy? To have a 90% accuracy, that means that you are selling so fast when the trade goes in your favor that there's never really a chance for you to be red. Now, this goes back to you can't go broke taking a profit. If I get in a trade and it goes up 1 penny and I get out, even if I made $10, that's a green trade. So I could do that 10 times and say, hey, I've got 100% accuracy, but I only made $100, right? $10 per trade, 10 trades, $100. This is almost like a signature of a newer trader, right? Because they get in the trade, it starts moving in their favor, they're staring at their P&L, they're not looking at their chart, they don't have a defined exit, and even if they do, they're still stuck on the P&L, and as soon as it starts ticking up just a little bit, right? Plus $5, plus $20, plus $30, then it comes back to 20, 18, they get out for a winning trade, but it's so low. right? But when you flip the tables around and all of a sudden they're in a losing trade, they got this hopium going out of their ears, man. It goes down lower and lower and lower. The number keeps getting more and more red, and they just stick with it, thinking it's going to come back, thinking it's going to bounce and get them out break even. Maybe they can reduce the loss, and all the while, the traders that do know what's going on are just plunging the stock, man. Just boof. And this guy's trying to stomach this. And then he finally takes that loss. He finally gets out. That's if he doesn't double down and try to average down and then take an even larger loss. But then how many trades is it going to take to get out of that hole? So why shoot for such a high accuracy trading style? Why not just trade only setups that provide a 3, 4 to 1, sometimes even a 5 to 1 risk reward ratio? With a 5 to 1, you only got to be right 17% of the time to not lose money. Isn't that better than the other way around? Having a 9 or 10 to 1, which is like, you lose 10 times more than you gain. In that situation, you've got to be right 90% of the time. What are the emotions that are going to be caused in each trade you're in? It's almost like if you have 2 trades in a row that are bad, you're like screwed for the rest of the week. So what I want to get across here is if you're a new trader and you're just beginning, I want to encourage you guys that found this video thinking that your accuracy isn't good enough to be profitable to really dig deeper on this topic, learn how to maximize and ride your winners and minimize, cut your losers so that you can skew this ratio in your favor. If you can do that, you're well on your way to being profitable, man. But the first thing you need to do is get confidence in your strategy. You need to be able to hold there, take your position, and believe in what you're doing. You need to believe that your strategy is right. Not just think it, not just because you heard somebody else say it. You need to experience it, go through it, and truly believe that it is a real edge. It's a true strategy, a profitable one. And the first place you should go to look how to do this is right here. This video is going to break down an exercise that you can do right now to start building up that confidence, start building up the convictions needed to not sell out too soon just because it ticked in your favor a little bit. Don't hold on for too long, and you'll see why if you watch the video. You get to see your metrics at the end of this, and those metrics are what this is all going to build on inside of you. This is what's going to really give you that emotional disconnect so that you're in control, not your emotions. So if you've got a low accuracy, don't worry about it. It's fixable without changing that number. And if you didn't know that 90% accuracy could still lead to a red trader, hit the like button, subscribe, hit the bell to be notified when the next video comes out. Next week, we're going to be getting into the good stuff, pivots, trend lines, inflection points. So don't miss it. Peace.